Hey guys, welcome back. My name's Aaron. This is Czar Finance, episode 42, Indicators and Oscillators. Alright guys, when it comes to indicators, indicators are basic calculations based on the price and the volume of a security that measures such things as money flow, trends, volatility, and momentum in a stock or in a group of stocks. For in this case, right now we're looking at the S&P 500. And you can see these group of stocks here. The stocks is the basic 500 that are going in different candlesticks here. We have indicators that help us guess and help us give us, not guess, but help provide us with better forecasting of where the stock might head in the future, whether it's going to be up, down, sideways, or whatever. As we talked about last week, we talked about these indicators on the side called moving averages, and I have these here that are the 20, the 8, the 10, the 50 and 100-day moving average that are located here in TradingView. If you want to follow me, my name is Alczar, A-L-C-Z-A-R. You can look on there, and I'm right here. I'll just pop it up there for you. See, there you go. That's what where we're at right now. This is a forecasted thing that I made saying that the S&P 500 is going to go neutral, meaning it's going to be going sideways and condensing in this chart here. Alright, so when it comes to indicators and oscillators, again, there's two main types. There's leading and then there's lagging. Leading basically means it's sort of information that's ahead of the game, information that's basically based on the future tense, telling us, okay, this is where the product is going to go in the future, whether it's going to go up, go down, or go sideways, and we make our best case judgments on them. But most indicators are lagging indicators, so when the market is being, when people are buying and selling, we're getting the information that's live in a minute chart or millisecond charts or whatever, that is indicating these trend lines that are tracking them as the stock goes up or down. And this is a lagging indicator. So this was here, and then this is showing what's happening in the past. These are all following, not in the future. These aren't forecasted in the future. But again, there are two types. There's leading and lagging, and there's also different types of constructions. And when it comes to oscillators and indicators. So in TradingView, if you look at the top here, I'm going to shut these bars off because you don't need to see all that. There's indicators, and the indicators here, there's a lot of them, guys. There's lots of them, thousands of them. I have a couple here that are the most common types of indicators. There's the Arun Indicator, the Arun Oscillator, the Average Index, Directional Index, the MACD, which I'm going to talk about with you guys next week, the Moving Average, Exponential Moving Average Indicator, the Balance on Volume and Relative Strength Index. For the heck of it, I'm just going to click on the Arun one just for now and just show you that one. And what you can see here as it pops down below, what this is showing you is convergence and divergence of a stock price. And stock markets, the way things are moving. So right now, when two lines are converging right here, that's called convergence, okay, when they are starting to crisscross. And usually where they crisscross is a sign where there's a change in the market, whether it's going up or going down. And divergence is showcasing where they have already crisscrossed and they're reaching their peak at the top, and they're going to reach the peak at the bottom, and then once they've reached the peak, usually considered from 0 to 100, that means the market has been drying up. There's not much left in there. Nobody's really buying anything, and then they're going to start crisscrossing back and do this, back and forth, as you can see in this previous history, using the Arun Indicator. These are great ways to indicate ways of people, to predict movement and buying and selling in the market. So you can say, if you wanted to, when this was at its high point here, but high and low right here, that you might want to buy if it's reached its peak, and then as it starts to crisscross, the market will be going in an uptrend over here, and then it reaches peaks, it dries out, it starts to fall down right here, as you can indicate right here, so it's come down, but then it spikes back up, then it reaches its peak, and then starts to crisscross once again. Now this is just the Arun Indicator. I'm going to turn this off, and I'm going to turn on a different indicator that's here. I'm going to say the Average Directional Index, and you can see what this one looks like. And this is another example of the highs and lows when this reaches its peak here. This is from 0 to 100 when it's around 30 or 100 points or whatever. It'll give you a gauge as far as this is the part when to buy and then when to sell and down here, etc. Another one could be the MACD, which is a very popular one. Let's see here. And looks like we've got two of them open. I'm sorry about that. And the MACD is another indicator where it shows volume as well as the double lines that are crossing here with a indication. So if you were following this blue line here, for example, it would be a signal that we're at crisscross. It would be a time to buy here as long as the volume is low. And then you can see that the volume is starting to ramp up in purchasing power, starting to slow down here a little bit, and it crisscrossed here again, and then it went back up, and that crisscrossed and drawing up. And this is a way to indicate that you could buy here, make some money, cap out here, let it ride its wave, and then kind of go that way. Now this varies per stock. It can change for a wide variety of different of stocks that are out there. Let's take a look at Apple and see what Apple's doing in this case with the MACD. The MACD is telling us basically it's kind of stagnant. It's in a pinching pattern right here. Right now, that's what I have here as our forecast. It's basically going sideways for right now until around April, May, June, July of next year is when Apple, hopefully it'll, I'm looking forward to bust out of it and then rebound off this support line and then pass out like that. So again, when it comes to strength indicators and oscillators, indicators have two different types. There's leading and lagging. There's convergence and divergence. And there's lots of different types that are out there. I encourage you guys to go on TradingView. Look for my name. It's alczar.com, or ALCZAR is my indicator. And look at the different indicators on here. And then you can see here that we also have, there's favorites, there's the public library. If you look at the public library here, you can see a lot of likes and different likes. There's different ones that are out there. If you look at the Lazy Bear, it has a lot of likes, very popular one. I guess people seem to be using. And it shows you indicators of when to buy and when to sell, and etc. And it's a great way to help forecast your thoughts as where to buy and invest your money. So right now, this is on a downtrend. I would not be investing in Apple at this moment because it's in a downtrend, and most likely it will bounce off this support line and then head northbound later on. All right. Best of luck to you guys. Thanks for watching. This is Aaron watching episode 42, Indicators Oscillators for Czar Finance. Take care. Bye-bye.